All right, dope. We're live. Okay, so what's up, guys? Welcome to another video. I forgot how I start these. I don't even remember. How you all doing? All right. All right. Today, I don't know how long this video is gonna be. We'll see. I'm gonna cover a few different things, as the title suggests. We did a position that went from 50 to 750. And so we'll go over that. We'll go over some of the things that are going on in the market right now, some of the things that I think are pretty important. So I'm going to go over this. You can tell by the sheer number of tabs that I have right here that some of the stuff is actually kind of important. So we're going to go through that. Okay, so to start, the first thing I'm going to talk about is Dollar Tree. That they had an earnings report, and I played a strangle on both sides. So playing the strangle on both sides actually allowed us the ability to really make something on this one. So what we did was, okay, so when we closed around here, we ended up buying a two, and these are not my positions. It's actually someone else. I'll link their channel in the description. They're way better at this than me, so I'm just a messenger as of right now. But it actually is very interesting and has a lot to do with how standard deviations are calculated as far as the stock market goes. So for example, we typically tend to look when something is about to move. For example, when something has an earnings, we tend to look within 1 to 2 standard deviations of whatever that stock is. Okay, and the way this is calculated is a long set of statistics that I actually do want to cover mathematically, so I'll probably do that in a different video. But as for now, let's talk about just how this one went on. We went from, so we closed at 112 when the market came down. We bought these positions, around this price actually. So what we bought was the 123, which doesn't even hit here, Jesus. The 123 calls and the 100 puts. Now after Dollar Tree reported, they had gapped down to about 97 and had continued to fall then. And so the option that we bought cost us about $50 to start, and then ended up costing $750 at the highest as of yesterday. If we look, we can look at it right now, and we can see what it's at right now. Just give it a second. Okay, so this was meant. So we bought 1 week out because that's the best way to, I think, avoid some of this IV issues right now. So it's worth about 620 as of right now. So it kind of held up. Not exactly. There was a lot of implied volatility there, so it's still held with that. But now it's starting to, because it is lower than it was yesterday, but it's still not at the same highest price that it was. So you live and you learn as far as these goes. But yeah, this was a great move. I lost the original dollars that I put into the 123s, and the one that I got in the 100s, they made a lot. It hit really hard, so it made quite a bit. It actually brought up one of the accounts right back from the dead, so that was pretty cool. No, it wasn't dead, but it was like $200, but now it's like 600. So that's cool. What else happened? So as far as that's concerned, finding these plays, I think I'm going to cover another video about standard deviation. This is more for my own benefit anyway. But yeah, so now let's switch over to this one. Okay, so now there are a few pieces of information that I think are pretty important right now. Before I talk about this one, I want to talk about the FOMC reports. They had a few meetings between today and yesterday. I think they have some today as well. And another thing that no one is really paying attention to right now, but I'll get into it in a second. But as far as everything else is considered, I do think this is really interesting that gold has been coming very, very low. You can read this article. You just search this in Google. I think it's very interesting how it's been moving this way. But then if you look at the treasuries, for example, the treasuries are down. Actually, the treasuries are down right now. But if you look at the TLT, which is the 20-year treasury, you can, if it ever loads, Jesus. Okay, so there you go. So the treasuries have been coming up while the market has also been coming up. So this isn't necessarily a divergence or anything, but this type of following is kind of peculiar sometimes. And then if you take a look at some of these other things, GLD, gold and nugget are really good ETFs to look at. They cover it pretty well. So they've been on a slower decline, but you gotta understand is that I think if I remember correctly, these things move like a ton. If it's not this one, it's actually Nugget. I think Nugget is weighted. It's a leveraged ETF. So yeah, it should be leveraged. So, for example, this day, yeah, it's like 5%. So these things are moving a lot, and Nugget does have options, by the way. So if that's something you're interested in, you can take a look at these. These are pretty risky. I did make a lot on Nugget back in December of last year. I had bought gold calls as soon as I started noticing that something was going on with the market. I had bought calls, and I only spent, I think at the time, what do you call it? I only spent probably like $75, and the thing hit like 270. So and that happened within the day. And so a lot of what's been going on right now, as far as my trading and stuff like that, has been day trading. So I am buying spreads. So for example, Apple spreads. Amazon has been very interesting. There was a thing that my friend had said that I realized was a really good idea, and I'll move it over here because I think it'll be a little bit more descriptive. Okay, we can look at it here whenever the loading sequence is done. Okay, so the way Amazon moves, it moves in hundreds, okay? So it moves about 100 points on a good day. What is this? Amazon. All right, it moves about 100 points on a good day, and I think that's pretty important as far as taking these on. I don't know why this one's not loading, but actually it doesn't really matter. We can take a look over here at the 1 hour and now the 4 hour. So for example, when we came down to about 17, yeah, this is not actually the example I want to use. I want to use this one. So when we hit about 1800, you could have bought an 1850 debit spread and a 1750 debit spread as well. And so play both sides, more or less strangle it, and then you ride whichever direction it goes. But you have to kind of time it. You need to get more than a week because this lasted 8 days. I'll show you. So from here to here, it lasted about actually 6 days, and then when you hit 1750 and it fell in around this range because it lasted for a little while. This one lasted like 11 days, so it didn't really break out. But then once we timed it, we started noticing, all right, hey, so Amazon's starting to kind of pick back up, and we ended up getting a very cheap, and so this is actually even better than a lot of the plays because this is a 1,300% move. We got a debit spread for about we paid at the time about $30 for it. And then the debit spread decayed, hit about 10 cents, so $10. And then after that, it started in this massive decline, or increase, I'm sorry. And as a result of that, the options went from $10, if I recall correctly, to $130. So that's about 1,300%. Now, timing these are really interesting. And if you can figure out how to do that, I think you are in a very good way as far as getting some consistent returns, is because some of these stocks are extraordinarily consistent. I don't really trade outside of stuff I know. Dollar Tree is not something I'd normally do under most circumstances. Now, anyway, that's just one little tidbit there. So I think I'll discuss that. I'll even show the spreads for that one in a different video. But as far as everything else is concerned, let's get into this. So gold hits a 2-week low, which I think is very important. I think. I'm not gonna say exactly what I think it means because it could mean a few different things, and I don't have those, I think, sorted out yet. And so as I clarify these thoughts, I'll probably get into it. But I think either way, pay attention to that fact. I think just read this article if you are interested in why certain things are happening certain ways. I think just read this article and the gold article. I think they're very interesting. Okay, so now for the reports, okay? And then we'll talk about the China deal. This is mostly just exclaims from Donald Trump about how we're going to, be entering into this trade deal. It's supposed to be December. That's when we're going to get it. And then, I think this also has something to do with the fact that there's a Fed rate cut coming. And no, it's not coming. So the rate cut date, the decision to do it is in December. I think it's the 11th. It should be here, so let me check. Yeah, December 11th. The chance of it happening is extremely low. It's less than 6%. And the chance of us staying around this third cut is going to be about 94%. So I think that there's a possibility that going into this, the markets are going to start, I think, climbing upwards. I think it's going to be slower. I think it's going to be steady. After that, though, after the year passes, I think is going to come the time for a completely different kind of opportunity. And I think you need to be on the lookout for that. I can't really tell you what it is. The market could climb way the hell up, or it could totally tank. We have no idea. And that doesn't actually really matter. You just need to pay attention to what develops. The information is coming as it goes, or coming as it. We're getting the information as it comes in. So just keep an eye on it, right? So we got a few different pieces of reports today. This is something that I think is interesting. Is that economic conditions? It's much more powerful than half full. With the right policies, we can fill it further. This is I think this is kind of like, it's a little bit of bullshit here. I think everyone is trying to make this exclamation that the market's doing very well, the production is really good, but I mean even the manufacturing index, which was recently released, it was the Richmond Manufacturing Index, which is released by Econoday, so you should go there if you want to read these reports. The new home sales are doing really well, so I think, or they're above what we are anticipating. So I think that's good. We're not experiencing any problems there. This will eventually be affected because of the fact that there was an FOMC meeting deciding whether or not they were going to regulate or deregulate small international banks, and I think that's very important as far as how home sales are being done, because the amount of financing that people receive is going to increase by a lot, especially as we further into 2020. So 2020 is going to be a very, very interesting year. So I think keep an eye out on this type of information. Keep up with Deutsche Bank, see what they're up to. Consumer confidence is, more or less pretty high. The actual is pretty good. It falls within the consensus range, so I wouldn't concern myself too much right now with consumer confidence or the CPIs or anything like that. But the manufacturing index is below what was anticipated. So before it was plus 8, and now they were expecting, I think, a plus 6, but we got a negative 1. So I think this is valuable. We need to be paying attention to how much is being produced. So these different types of things, this is the part that gets me. This is the part that diverges from the rest of these pieces of information. So this kind of means that the rest of the market, the thinking hasn't caught up with the actual, right? I base a lot of my thinking based on production. I don't base it necessarily on confidence and things like that. Not just as much. Not right now. In times of distress, then you can use consumer confidence. You can multiply it by 2, and I think that's what the actual usually becomes, because things tend to be a little bit overstated as far as the market goes. So now another thing that I wanted to talk about is no one had noticed this, but this was around, the 10-year was at like 1.9, I think, and it's been slowly kind of slipping. These have been coming closer, while the 2-year has been increasing faster than the 10-year. I'm not saying we're going to see another inversion or anything like that, but I'm just saying take a look at the short-term versus long-term confidence in the market and see what that actually means. Because if they're going up, then why is the 2-year coming up faster than the 10-year? It's because people think that they're thinking more short term, and that type of thinking is very important. Thankfully, the 30-year is still at 2.1, so I'm not too concerned about that just right now. Today is Wednesday, so tomorrow is going to be closed, obviously, because it's Thanksgiving. So I think today is going to act a little bit like a Friday, and then the Friday closes at 1. So that's another piece of information that I think is going to be valuable. The impeachment news is coming as well, so the market is starting to react to that. We are hitting higher highs, I think. Not I think. We are definitely hitting higher highs, and you can kind of see that here, that if even in Amazon's finally starting to not diverge, but we'll actually kind of have to see how that goes. But I'll show you what SPY is doing. We're at like 313. If it ever loads. Streaming, I think, takes a lot of bandwidth. Okay, 314. So we're at all-time highs, obviously. So I think that's important. We are going to start seeing, I think, news hit more. Earnings season is totally just wrapping up now, so we're almost done. There's going to be more trials. There's still trials going on, so we're going to see more stuff about what's going to happen to Donald Trump as far as the impeachment goes. We're going to hear more, I think, on the 4th of December. That's when we should be expecting to see a lot more information about it. You might actually see the market react to it. We'll have to wait, and we'll have to see. But yeah, so these are all, I think, the pieces of news that I think you should pay attention to. We'll read these articles, watch gold, watch the TLTs, because the TLTs are coming up. Yeah, and I think that is it for this video. I'll see you guys next time. Thank you guys for watching.